Shares of ARM closing the day in the red. It says their tough times are persisting as Cathie Wood is advising to stay away from the stock that's amid too much emphasis on artificial intelligence. So this one is an interesting name, Akiko. So ARM, obviously, there were some questions about that. Skeptics didn't like the valuation. They didn't like the headwinds to growth, right? Obviously, we think of ARM, we think of the smartphone market, which is slowing. On AI, it's interesting because I was talking to tech analyst Patrick Moorhead. I know you know Patrick. Here's how he would put it. He would say ARM is a secondary player in AI. He says, listen, they're not NVIDIA, which, of course, poster child of the AI boom. But he did point out that, NVIDIA, which is with its new super chip for the data center, the GH100, that is a combination, he said, of NVIDIA's GPUs and ARM's CPUs. His point is they are a player, but maybe not enough of a player for Cathie Wood.
And that
apparently
points to kind of why we have seen ARM now in its fourth straight day of declines. The initial pop we saw in the expectation that they were going to be a player in the AI game, but since then we've seen analysts initiate coverage with some skepticism. Cathie Wood, the latest to join in, but it really does point to what we have heard from Needham as well as Bernstein saying, look, it's not that we don't believe the AI story, we just haven't seen it. And we don't know how significant a revenue driver it's going to be moving forward. Instacart, also following ARM in the post-debut struggles, closing its first full trading day in the red. I mean, it's certainly too early to say where Instacart is likely to land in terms of where the company is. But, part of this, Josh, is also trying to figure out where the competition is for the company. The company's talked a lot about sort of the ads now really driving revenue, but Instacart's still being seen as this grocery delivery company. What are these additional tentacles they have to drive revenue beyond their core business?
And Instacart itself says, it's a great point. They themselves say, listen, you got a lot of competition. Potentially they called out everybody from Walmart to DoorDash to Uber, so there is a lot of it.
Yeah, let's move on to our next stock that we're watching. Shares of IBM higher today after RBC Capital Markets initiated coverage on the stock Wednesday with an outperform rating and a price target of $188 a share. Analyst Matthew Swanson optimistic on the competitive positioning and unique role that IBM plays in the tech ecosystem. I was looking up this note, Josh, but really, in some ways, this is kind of an outlier, right? 28% of analysts still have a buy rating, but 67%
on the sidelines.
A hold.
No love for Big Blue.
No love for Big Blue, but RBC is saying, look, there's a bit of a misunderstanding of what exactly their software business is, and that's why it's largely undervalued.
Yeah, listen, IBM has not done much this year, right? It's up single digits, but if you're a bull, you say, great, it's underappreciated. And listen, there are bulls who they look at hybrid, they look at AI, they look at consulting, and they're fans.
Yeah, the stock getting a lift at least on one day here on the back of RBC's initiation. $188 a share, which implies 28% upside to where we saw it close on Tuesday.
Yep.